just got hammered on your tax return. Should you have been an S-Corp? Don't listen to Uncle Harry. Stay tuned and get the straight facts. Welcome back. So today we're going to discuss whether this is the right thing for you to do. And we'll look at some examples, I'll go over some high-level stuff, and then at the very end, I actually have an example to show you how a sole proprietorship versus an S-Corp really works out so that you can understand what you're talking about when you go and talk to your professional to decide if this is the right thing for you. So let's go ahead and get started. So first of all, there's a misunderstanding about what an S-Corp really even is. You don't go set up an S-Corp. It's actually a filing status with the IRS. So it really is a matter of filing an election with the IRS. But to start with, you either have to be an LLC or you have to be a corporation. So I just wanted to set that straight. Don't go out there looking for an S-Corp paperwork when you're setting up with the state. That's not how it works out. Now there's a lot to all this, and I'm going to skip the technical stuff for this video because right now you're here just to find out if this even makes sense. We'll do more videos later on to go over the technical parts and all the details and the nuts and bolts. But for now, you want to know, is this right for you? Now right at the beginning, I want to caution you. Everybody has heard from their buddies that they should be an S-Corp, but that's not necessarily true. And there's a lot of pitfalls that come along with this. There's extra compliance. You may have to do payroll. You're going to have to take a reasonable salary. You have to file an extra tax return. So before you go jumping into this, make sure this is the right thing for you. So, because so often somebody comes into me, they've been talking to some other supposed professional who thinks everybody should be an S-Corp, and it really irritates me because it costs the client a lot of money and pain and stress that they just really weren't ready for. The S-Corps are wonderful. I love them. I have a lot of my clients that use them, but it has to be in the right situation. So let's talk about what an S-Corp is. An S-Corp is what they call a flow-through entity. And what a flow-through entity means is the S-Corp does not pay tax, at least not income tax. It pays payroll taxes and property taxes, but it doesn't pay income tax. And this is important because a lot of you have heard about double taxation, and that's what happens in a C-Corp. We don't want to get our money taxed twice. And so a flow-through entity avoids that. And what happens is when the S-Corp makes money, the income or the loss, either way, and that can be an advantage in and of itself, either way, it flows back through to your personal tax return, and the income taxes are paid at the owner level. And this can be a big advantage, but there are times when it can be a disadvantage. Sometimes a C-Corp may make more sense for what you're trying to do, but we're going to keep it simple for today. So that's what a flow-through entity is. S-Corp and partnerships both work that way, and you need to understand that as we get into this. So just know that if you have an S-Corp, it will not pay income taxes, and that can be a big advantage. All right, as we're going into this, we need to talk about self-employment tax. So self-employment tax, that's the thing that makes you feel like you just got nailed on your tax return, right? You went in, you didn't feel like you made that much money, and then your tax guy says, you owe all of this extra tax, and you're like, how's that even possible? Well, it's possible because of self-employment tax. So self-employment tax is a 15.3% tax on the profit of your business. And what it really is, it's the Social Security and Medicare that you're used to paying when you had a W-2 job. If you remember, you looked on your pay stub and you had these extra two withholdings called FICA and Medicare. And out of your check, they held 7.65%. What you may not have known is that your employer also had to match that and pay another 7.65%. And in theory, that's what's going to be there when you retire. Another video. In theory, that's what's going to be there, and that's how you're going to draw out Social Security when you retire. So we don't want to completely avoid this, but that's what self-employment tax is. The problem is when you're self-employed, you pay the full 15.3, and then you also have to pay the income tax. So if you're somebody in a 22% tax bracket, all of a sudden you just lost 40% of your money, and that can hurt a lot. So self-employment tax is going to come into play a lot in this discussion. So stay with me, and we're going to keep going through this. Now, if you're finding this video useful and it's making sense to you, and hopefully it will more, go ahead and subscribe if you would right now. for whatever reason, YouTube really likes it when you like a video and you subscribe. It helps me out a lot, helps our business, and it helps me be able to help you more. So if you wouldn't mind, go ahead and subscribe, like the video, and then we'll keep right on going. Okay, now there's a term that you're going to come to know if this is right for you, and it's called a distribution. And distributions, those are the magic. That's the magic that makes the S-Corp work. So what is it? Well, if you start a business, the reason, at least I hope so, the reason most of us start a business is because we want to make a profit, right? If you didn't, then this probably isn't the video for you, and I'm probably not the accountant for you. But we're in it to make a profit. And the IRS says, you know what? It's okay to make a profit. That's what the distributions are. So if your business makes money, we can take a distribution out of the company. What's amazing about distributions is we don't have to pay any self-employment tax or payroll taxes on distributions. That can be magic. Well, that can be massive savings, and that's one of the big reasons why many people want to set up the S-Corp. So distributions are the profit from the business, and it makes sense. If you invest in Ford or General Motors, you get a dividend a lot of times, and that is the profit that they've given back to the owners. So as an investor, which is what you are in your S-Corp, you have a right to receive profit and not get double taxed because you're an S-Corp, and not have to pay payroll tax because that's money that you got that was not from your wages, but from the earnings and profit of the business. Okay, so you're saying, Doug, that's great. What in the world are you talking about? Well, now I'm going to go ahead and shift to an Excel spreadsheet I put together. First of all, this is a simple example, so I want to be very clear on this. This cannot take into account every scenario, every different thing that's going on. You're going to need to work with a pro to work through this, but this is a good way for us to go ahead and look at how this works and if it's going to make sense for you. Okay. So what you can see right now is I've pulled up an Excel spreadsheet, and in that spreadsheet up the top I've got a sole proprietorship, and we're working with somebody who has a $100,000 profit. And I'm just going to tell you right up front, in my mind, if your profit's not somewhere in the $75,000 to $100,000 range or up, you're probably not ready to be an S-Corp. And I think some of that's going to start to become clear here in just a second. Now, many years ago, I used to say 50,000 was kind of the starting point. But in 2018, with the Tax Cuts and Jobs Act, they added in something called QBI. And that changed my calculation because QBI is impacted based on the profit of the business, and wages don't count. So that changed the math a little, and you'll see that more here in just a minute. So if it's not there and you've got an accountant that's telling you at 25,000 you need to be an S-Corp, I'm not going to say he's wrong, but he's probably wrong, or she. But there could be reasons, but I think you'll see more here as we go through this. I'm going to go through this pretty quick. Just know that some of these numbers are rounded. Took this out of my tax software. It's a little bit harder to follow than if I just did it just doing rough numbers, but I wanted to give us a more accurate representation so you see how this really works. So here's how this is. So you've got 100,000 of income. I'm using the example that you're married filing joint. So you get a 27,000 standard deduction. You get a $13,000 QBI deduction because you can only do the 20% QBI based on your income. So in this case, we're not going to get the full 20% because our taxable income was reduced. We get a deduction for half of our SE tax because the IRS said, hey, you know what, we're hammering you on this tax, but we feel bad, so we're going to give you a deduction for half of it. And then you're like, thanks, that's great, but I still feel like I paid a lot. That's what that deduction's all about. And so we end up with a taxable income of around $52,000, and that gives us an income tax, the first tax, of about $5,800 if we were filing joint. Now we're also going to have to pay a tax of around $14,000. It's a little less than a true 15% because we get some deductions. So It's just ballpark, it's not exact. I just want you to kind of see how this works. But you have to pay self-employment tax of around 14 grand. So that puts you with a total tax of $19,800, and that ignores state because we're just focusing on this part. So that's how a sole proprietor pays tax. Now let's move along to this example for the S-Corp. And what I did here is you're required by the IRS to take a reasonable salary. Now, reasonable salary, that's a whole nother video. We'll do that another time. But to try to make it simple, if you were to hire somebody to do all the things that you do, what would you have to pay them, right? You know, a lot of people will say, oh, well, you need to pay 50% in wages versus distributions, or 40% or 60%. You'll find a million different answers because there's nothing in the code that tells you. And people use rules of thumb, and that's fine. There is a scientific way to get there, and if that's something you need, we can probably help on that. But we have to have a reasonable salary. So what I've done in this example, I've said for $100,000, it's going to cost me $60,000 to get a manager to run a business that makes that kind of money. So I'm just using round numbers here. And if I did that, our total income for our tax return is $100,000. $40,000 is our profit distribution. That's that magic part we talked about a little bit ago. And $60,000 is our wages that we had to run through payroll. Now we still get the 27.7 standard deduction, but in this case our QBI is only $8,000. And the reason is once the Tax Cuts and Jobs Act passed, we could only do QBI, which came out in that act too, so that came out weird, but we can only deduct 20% of the profit of our business, and the business profit was only $40,000, not the $100,000 like we saw earlier. So we only get an $8,000 QBI deduction, and that's part of why I have some things that I'm going to talk about you here in a minute. Then we have to run payroll. Well, payroll on $60,000 this is going to cost us $4,590 in Social Security and Medicare tax. There's also going to be some unemployment and a few other things. I left that out of this calculation because they're usually going to be fairly minimal, but once you know they are there. So that gives me a taxable income of about $60,000. And so my tax is going to be around $6,700. But remember, I still had to pay the $4,590 in payroll tax out of my business, and I had to pay $4,590 out of my paycheck, right? So my total tax in this scenario is $15,880. So let's look at this side by side, and then we'll draw some conclusions from that. So side by side, you can see our income's about the same. Married filing joint standard deduction, of course, that's the same. Our QBI deduction, it's less when we have the S-Corp because it's only based on our profit. Our self-employed payroll deduction, that's less because of how it works and the way an individual works versus an S-Corp. On the S-Corp, we get to deduct the part of the company's payroll taxes, but not the part that we pay out of our paycheck. And that's why our taxable income is a little higher on the one versus the other. And that ends up with us having a tax of about $900 more. Now, that's where the magic is. Remember that SE tax, $14,000. For the S-Corp, none. We don't pay any self-employment tax as an S-Corp. We did have to pay $9,000 in our payroll taxes. Remember, $4,590 out of your check, $4,590 out of the company, and we see that down here. So our total tax savings is $3,920. You're like, sign me up, I just saved $4,000. That's awesome, why didn't we do this sooner? Well, what about getting that corporate tax return done? Those aren't free. It takes some expertise to do them right. Trust me, I've seen a lot of them done wrong. You don't want to cheap out on this unless you want to get audited. So I just threw $1,000 in there. That's probably a little low, but your individual return may be cheaper now since you don't have to do the business return there. So I'm just using numbers there. And then payroll, you're gonna have to take a reasonable salary It's not something I would recommend you try on your own. There are, I'm not going to name names here, but you can get payroll done for officer only for probably about $50 a month with some online services. So I put $600 in there just to give us a rough place to guess. True savings now is $2,320. You're still saying, you know what, that's $2,300 in my pocket. Sign me up. And I would agree. But we have to be careful. One, what about work comp? I've ran into situations, especially with people who have construction businesses, that now once they're set up this way, their work comp goes up in a corporation versus sole prop. So make sure you talk to your insurance agent on this. Don't let the tax tail wag the dog. It can cause some massive, massive problems. What about state filing fees? Certain states charge quite a bit extra for that LLC or S-Corp, depending on how we're set up, and we'll talk about that another time, but just know that some states, I know California dings pretty hard just for having an entity, income taxes. You know, Tennessee's a state that doesn't have income tax for individuals, but if you're an LLC, all of a sudden you do, and you don't find a lot of S-Corps in Tennessee for that reason. So don't just run into this without checking all the details. Please check with an advisor to make sure you're getting good information. Okay, so there's a rundown. I hope that helps you see it. I know those numbers are rounded and they're not perfect. That wasn't my goal. My goal was to help you kind of get an understanding of what's going on. And maybe a 40-60 split's not right. Maybe it's the opposite. Or maybe it should be a 50-50 split. We have to work on reasonable salary and come up with that. If it's a 50-50 split, all of a sudden we saved another $1,500, and it's looking really good because remember, every $10,000 we pay 15% in self-employment tax. So if we can reduce that number legally, that's a big benefit. So we can't just take it for granted. Also, if you make more money, then the bigger this gets. So, and realistically, most of our clients probably save in the $3,000 to $6,000, $7,000 by being an S-Corp versus a sole prop. Some do more, some do less. If your business is growing rapidly and your profits are going to be a little low, but we know we're going to be getting there, it might make sense to go ahead and set it up that way from the start. Like I said, I just recommend you get a good advisor, but I want you to know what you're talking about. If you go to a guy who says, let's pay you $1,000 a month and take the rest out in distributions, trust me, I've been doing this forever and it always works, go find another accountant. That guy is gonna get you in trouble. So I hope this has been helpful. If it has, please go ahead and subscribe if you didn't earlier. I'm going to do more videos covering this because I think there's a real need to get real answers on this, not just propaganda and nonsense. So go ahead and subscribe. We're happy to help, and have a wonderful rest of your day.